All right, good morning, all 5 of you. Good to see you this morning. Hope you're doing well. Hope you're happy, healthy, feeling good about the world. It is Wednesday, November 27th. Look at all that news going on today, guys. The 8:30 a.m. was pretty much a dud. We have 9:45 Chicago PMI, and we've got 10 a.m. core PCE, and then 10:30 crude oil inventories, guys. So there's a lot going on this morning. Hopefully it pushes the market, creates some moves for us here and there. I got 5 of you today. Oh, 6. I've got 6 of you today. So we'll just have some fun, guys. We'll go through it. I don't have any new names in here. All of you guys have seen the 101. It's up to you. I'm going to give you the choice because it's a holiday. Do you guys want me to go through the rules, the 101 rules? Do we want to reinforce momentum, clear path? Do we want to reinforce those entries? All you have to do is give me a why, and I'll do it. Otherwise, we're going to look at charts. We'll watch the live market. We'll see if we can work some lessons in here and there. And I do want to do some management lessons because I think exit strategies. So thank you for saying that. Thank you for saying exit strategies, Rob. So the biggest thing on exit strategies is going to be entries, if that makes sense. So let's just do a whole thing on it today. Let's have some fun with it. Man, ask me a million freaking questions today. And let's make sure that everybody gets what they need. Good morning, Erla. I am going to go through just a little bit here because I feel obligated, without a doubt. As you build a foundation, guys, keep it simple. As you begin to work your way into this trading thing, less is more. Less is more. It really is. And what I want you to take more than anything, no worries. And Rob, I don't think that's your biggest challenge. I really don't. I think that your biggest challenge is just not creating expectations. So like when you take a trade, right? And let's do it this way. When I take a trade, when you take a trade, when anybody takes a trade, there has to be a reason that we got in, right? There has to be a reason. And the one thing that you're super rock solid at is identifying momentum, right? That's your thing. That's the best thing you have going for you, without a doubt. So I want you to see something. And let's go to... I'm going to get rid of that. I'll just use the pictures that I have. We won't even worry about the slideshow. So guys, I want to create just a little expectation, and let's get rid of all the indicators, Rob, on the large chart, with the exception of the trigger lines. And I want you to tell me what you think about this. And guys, this is for everybody. Man, I see more people filing in. We may do the 101 lesson then, because I do have new people coming in. But I'm taking everything but the trigger lines off of the S&P here, and we're going to come back to it. But Rob, you don't have any problem identifying this right here, right? Guys, does everyone see this? This is rule number 1 for the high probability trend trade. This is odds favorable momentum. When there's a separation between the small and the large, guys, this is the one. This is what gets people excited. This is a look that can push the market. This is a look that can break areas. And you know what? I'm going to do it on crude oil because it loads faster. But I'm going to take 2 charts. Guys, I just want you to see something here. I'm going to take 2 charts, and the only thing I'm going to put on those 2 charts is trigger lines for momentum. And I want you to see how momentum works. Because if that's why you're jumping into a trade, like if momentum is your thing and it takes momentum for you to get into the market, let's just go with that expectation. So I'm going to back it up, and we're going to do nothing but trigger lines, guys. That's it. So Rob, here's your trigger line look. Okay, from right here, the point of separation, guys, odds favorable momentum goes from the point of separation until they return to the triggers. So that's the beginning of your momentum phase. And I'm going to back up, and we're going to go to that 4:30 hour. And I want you to see something on the small chart. So Rob, not one line, right? Not one line on this chart. Nothing but momentum. You cool with that? And guys, this is a great lesson for you guys. I worked with a gentleman, and his whole basis for everything was momentum. That's it. Mark, I'm looking to jump in, jump out, make money, momentum. So check it out. Rob, if I decide, and this is what I want you to think about. This is my large chart. If I choose to enter based on the large chart momentum. Morning, Zorro. Hey, Nanda. This is my why. Is everybody with me? And we're going to go back, and we're going to do a lot of lessons today, guys. We're just going to have fun. This is your day. It's a holiday. We're going to have a good time. So if I choose to enter based on large chart momentum, Rob, this is your why, right? Are you with me so far? I'll use the small chart momentum to show me when my Y is gone. This is my exit condition. So my entry condition is momentum, and my exit condition has to be as soon as that Y is gone. And that's it. So if I jump in, because of momentum, my exit strategy is when momentum goes away on my small chart. And Rob, that's a close. That's a reversal bar on the wrong side of the triggers. Does that make sense? And I think this is what we need to talk about today for a lot of people. So if your why to get in is momentum and momentum alone, just JTFI, right, Rob? Not looking at lines, not looking at pullbacks, not worried about anything, just JTFI. Then you know that this look right here, no matter what, whoops. Get off of there. This look right here, without hesitation, no question, not up for debate. Get the hell off of there. This is my exit strategy. A close on the wrong side. And here's what you've got to squash, guys. But what if I wanted to go up higher? Yeah, Rob. Because that's a loss of momentum. So this right here, this is my Y, not my highway, going away. This is my exit. So if this is why I get in, I'm going to go to a smaller, faster chart so I don't have to have giant stops. And this is my why. So when we talk about using a strategy like this, and let me go through and let's look at your picture, Rob, and let's ignore all of the lines, okay? We're going to ignore every line on the chart. Couldn't care. Couldn't care less that you traded into a termination condition. If momentum is the reason, and you didn't wait for the pullback, if momentum is the reason for entry, if I get one of those closes on the wrong side of the triggers, Rob, that's my loss of momentum. What does that mean for you on an exit strategy? That means that instead of having 6 points of risk, your stop can go right on that reversal bar marker. Because the only thing that you're relying on is that giddy up to the upside. But here's the part that's, I think, escaping you, and this is what gets a lot of people, is if I just jump in for the hell of it right here, I have to be willing to take a small loss. And if I jump back in, I have to be willing to take a small loss. Does that make sense? Taking 2 or 3 losers this big knocks you out of the game. Taking a couple tiny little hickeys, not a big deal. But Rob, here's how we can make your trading strategy better. Momentum is huge. I love momentum. But what if you didn't trade directly into areas that could create a bounce? Then the market is less likely to give you that loss of momentum that's going to pull you out. Does that make sense? And there's a reason that we do multiple things. Your momentum is great, dude. Your momentum is rock star status. Your ability to recognize odds favorable momentum. You do it as well as anybody that I've ever worked with. So what you need to do now, in my opinion, this is just a study strategy and not trading advice, is you got to figure out this damn clear path thing. Because what's happening is you're jumping in with the momentum, but you're jumping in directly into things that are going to rob that momentum, that create bounces. Does that make and then that's cool. You've already negated the entry area. You don't wait for an entry area. You just jump the fudge in. And I want you to see something. And this is kind of cool, and this is one of those trust things, right? Let's see where our next momentum run is. So here's our next momentum down. Rob, if you just jump in, that's your exit. And look how effective it is. Isn't that cool to be out on 5 or 6 ticks instead of 26 ticks? And then it goes sideways and you never have momentum. It keeps you out of a trade. And then we get momentum up. And let's see where it finally all agrees. So there's our momentum up. And that momentum dies. And this is that down. And then it goes up. And it continues up till it closes on the wrong side. So the idea is that, so that's it. So there's no more trade. That's it. And I talked to my brother about this morning. And the biggest challenge I think with traders is, Rob, and this is everybody, not just you, is that we refuse to believe. We refuse to believe that there isn't some hidden money in every nook and cranny of the market. We believe that every move is our move. And I want you to look at crude oil right now, Rob. This is, the clinical term is, this is utter bullshit. It's caught in between areas. There is no clear path whatsoever. And this is where we have to say it's better to do nothing than to hope. It's better to do nothing than to hope. Because look at how often these areas created a bounce. Do you see it? And then even on your small chart, almost every time you hit a line, it creates a bounce. But check this out, Rob. When you get above the lines, and you get above the lines, and there's room to the next line, that's your money, brother. That's your money. That's where it's easy. So your job is to be patient into the lines. And then at least when your small chart breaks through a line, I don't care what it is, divergence, fib, one-to-ones, let the whole bar get above it and then just hold it until you get the close. There it is down. There's no lines in the way. And that's this right here. And then once the whole bar gets below that line, Rob, hold it until you get the close on the wrong side. And I'm telling you, the idea is that, okay, if momentum is my only reason, then a loss of momentum has to be my reason to exit, whether I hit $15 or not. Does that make sense, Rob? Because I think that is the missing piece. Everybody's got a missing piece when they start trading, guys. So price reaches an area. Where are my triggers? They're all above support. I don't have a trade into this area because this area may create a bounce. So when we talk about learning to day trade with Nexgen, when we talk about learning how to recognize what it takes to get us into the market, there's a reason that it's three things. It's a very specific reason, guys, because momentum and clear path are the foundation for almost every trade that you'll ever take with the Nexgen. Whether it's momentum to the upside or the downside, whether it's a clear path to the upside or the downside, when you couple these two together, guys, the success rate goes up dramatically. Once you forfeit one of them, your likelihood of success goes down dramatically. So every day we talk about this. We talk about these three rules, guys, and I've been doing the same thing for 4 years, where I talk about these three rules. So we're going to go through them, and we're going to do them a little quicker. And I'm going to start from this current slide. We're going to go to these three rules. In the easiest lesson, without a doubt, the easiest lesson for everybody is momentum, guys. But you know what? Before we do that, where do we have to find them? Let me show you. You have to remember where it happens, where the rules are met, where momentum comes from, where that clear path comes from, guys. It's a large chart scenario. So when you look at this on a whole, there's only three rules, and there's only two charts for the new user. And my promise to you is that once you can identify momentum and clear path, hey, good morning, once you can identify clear path and momentum, guys, it opens every door that you ever wanted opened. You'll begin to see things that make sense. Good morning. What's going on, Jeffrey Dean? So let's go through momentum and clear path, guys. Let's talk about it. But my goal for you, and this is for everybody, especially you new guys, I want you to look at your chart and I want you to say, I have momentum. And that's the easiest thing to do. Momentum's the easiest to identify. But I want you to force yourself to follow that up with, I have a clear path. Because once you do that, and Rob, that clear path will change your trading. Because in the last month, you've shown me a lot of pictures. And there's this very common thread that every time you trade into an area, you hold for really big losses because you are only trading with momentum. So we either need to figure out how to stop you from doing this, or we need to figure out how to get you to accept that there is an exit condition. So this is your thing to work on. This is precisely what you need to do to fix the challenge that you're having. And we're going to do it together. So, three rules, guys. That's it. Momentum, path, and then your entry, and your entry is up to you. Initially, it's the high probability trend trade. Three rules happen on only two charts. Big chart, little chart. Big chart will define momentum. Big chart will define the path. So, momentum's easy, guys. That's the separation in the triggers. In an uptrend, when the background is green, okay, and you know it. No, Rob, it doesn't bother me at all. This is my job. My job is to help you guys get over the hump. I love it. But I'm just like a coach, right? I can say, hey, this is what you need to do. But it's on you to do it. So I absolve myself of all responsibility when I give you the lessons you need and how to study them, guys. After that, the ball's in your court, and it's up to you whether or not you want to study those lessons, whether you want to practice it, whether you want to go back and take pictures of termination conditions for 6 hours straight so you never F it up into termination conditions. That's the part I can't control. I love teaching this stuff, guys, because I know that it works, because it works for me every day. If the background on your large chart is green, guys, the market's going up. Go up with it. That's the easiest way to do. Easiest thing to do. Momentum to the upside means that your small triggers are above the large triggers, that the large are wide, that there's space between. Guys, this is your look. No matter what market you're looking at, no matter what chart you're looking at, this is your look. This is always your look. And when you have momentum, the odds are favorable for the market to continue up. And I love that phrase, odds favorable momentum. And most of you latch onto this from day one. And you say, man, when I have momentum, that market's likely to push. And in a downtrend, that separation. When I have momentum, the market's likely to push. And guys, is there anyone in the room that's not comfortable with this look of momentum? Because this is the look that pushes the market, and this is the look that gives you the highest chance of success. And guys, this is the one. I love it. Very cozy. But the problem is, you've got these amazing lines on your large chart, and I think one of the biggest epiphanies that I ever had, and one of the greatest realizations that I ever had, was that decisions are made at these lines. What does that mean? That means that when I reach a divergence high or a divergence low, when the price bars reach a divergence high or a divergence low, when they reach Fibonacci resistance, when they reach Fibonacci support, when they reach these yellow one-to-ones, guys, when price reaches one of these areas, somebody with more power and influence than you is going to make a decision. They're either going to decide to exit their position, or the opposing force is going to make the decision to flood the market with orders to push it the other direction. Sometimes both forces fight. And I'm telling you guys, if you take this look for termination conditions, the easiest money that you'll ever make is from a termination condition to the next termination condition. Get below it, go with the momentum, don't have anything in the way. And in these little snippets, not everything is a home run, but what happens is every time price reaches one of these areas, you can see the little tails, the fluctuations. It happens here, it happens there, it happens there. There's a tail right there, guys. There's fluctuations at this fib. There's a reversal at this fib. You can see the fights. So you know where these fights are likely to happen. You know long before the market ever gets there precisely where these decisions are made. So if you're focused on clear path, this is it. This is the golden goose, guys. Let price reach the area. Let the decisions be made. Let the people that aren't you decide what the market's going to do. And when I reach resistance, if my trigger lines are below, don't trade into it. How easy is that? Rule number 2 is not met. Don't trade into it. Price reaches a line, triggers remain below resistance, above support, just don't trade into it. This is your safeguard. This is your whoopee right off the get-go, guys. And let me show you why. And let's use this one, right? Because the triggers didn't get above resistance and resistance held. And support held. And resistance held. And support held. And support held. Oh my gosh. And resistance held. And resistance held. So many rectangles, I'm going to crash. And support held. How many times over the course of 5.5 hours did an area break, guys? Not one. So, Rob, this is for you. You have 10 days worth of data. I want you to go back every time price hit a line and the triggers didn't break it, and I want you to take a freaking picture of it. Because if you go back 10 days worth of data and you do that, you're going to stop trading into these lines. Because what you're going to find is that if you take 100 pictures, at least 70 of them created a bounce that would have killed your money. And guys, people that trade into lines don't believe these lines can stop them. That's it. There's no trust. There's no trust in the idea that if price reaches an area and the triggers don't break, that it's more likely to stop the market than it isn't. This is rule number 2, guys. This is how you avoid getting beat in the decision-making process. Does that make sense to everybody? Because let's not go to broken areas yet. Let's really focus on the idea that if price reaches the area, all you have to do is ask, where are my triggers? And I promise you, this was the thorn in my side, my Achilles heel. This is what cost me trade after trade after trade after trade. Rob, respectfully, with love, I got a big virtual hug for you. It's killing you because you won't stop trading and start studying for just a day. You're not willing to give up your trading for a day to go do something that will make your trading better. And guys, that's everybody in this room at some point. Eventually, you've got to get so freaking sick of losing your money into lines that you say, oh my gosh, maybe I should back it up a second. Maybe I should go study these. Maybe every time I hit a line, I should ask myself where my triggers are. Let me learn the process so I can get rid of these avoidable losses. And Rob, it was about 1,000 times in determination conditions before I finally got the idea out of my thick skull that the only way to learn how to trade was to trade. I'm telling you guys, I've been there, I've done this, I've screwed it up. So what do I need? Guys, I need a clear path. I need all of my trigger lines below support because that's when it's easy. I need all of my trigger lines above resistance because that's when it's easy. And I promise you, trading directly into lines is difficult. Trading from lines is easier. Every time. So when you look at your impending trade, it's either a termination, none of my triggers have broken, or it's a clear path. All of my triggers have broken. That's the easiest way to trade, guys. That's your blanket rule. That's the let me keep you safe. That was you. Learn by doing. Learn by doing is effective on a scale if you know what you're supposed to be doing, Jonathan. That's the problem. If you go out and you play golf every day for a week, but you don't understand the swing mechanics, all you're going to do is take a week of crappy golf shots. But if you go to the driving range and you practice your mechanics, right, with no threat of a bogey or a triple bogey, no desire for a birdie or a par, but simply focusing on the mechanics, suddenly you start hitting the ball nice. Guys, there's a reason that pilots have simulators. It's so they don't kill themselves and the people around them when they get in the air. So brand new users, it's either broken or it's not. Like, let it be that simple. So check it out. Let's go back to the live market. I love this lesson because I was a victim of this. I made myself a victim of it. This path is clear. Look for an opportunity. How easy is that? This is not. Let it break. Is everybody good with that? It's almost oversimplifying the concept. Just let it break and check it out. It's broken. The path is clear. There's room to the next target. Guys, this is where the easy money happens. Rob, let's go see if there was one of those JTFIs where you could have just jumped in. Could have jumped in. There's your close. Once you get below that line that could create a bounce, there's your next jump in, brother. And you haven't gotten a close. So let's jump in just for the heck of it. My stop, if I just jump in, goes on that reversal bar marker because that's a close on the wrong side of the triggers. So we're going to see how long this one goes down. Does this make sense, guys? If all you do is jump in because everything's down and there's nothing in the way, that close on the wrong side. No reason to have your stop way up here. Force it to close on the wrong side of the triggers. Rob, does that make sense? And this is super late, guys. Obviously, this is a crazy late entry. But doesn't it feel better to have 9 ticks of risk instead of 29 ticks of risk? Because my why is that I jumped in. My why leaving is a close on the wrong side. So path is important, guys. And once you understand clear path, once you understand termination conditions, then you can start getting a little fancy with it. Then you can look at these 50-50 looks, these potential to break looks. And this look, the small triggers have broken through, but the large haven't. 50% are through, 50% are not. When you have that odds favorable momentum that we all love, guys, that's what gives it the potential to break. But again, it's not broken and the path isn't clear. And if you're just jumping in, guys, there's still the big potential for those fluctuations. Be cognizant of what's happening on your charts. Is it still going? It is. It's still going. But the idea, and this is the one that I think is so important for everybody. And again, guys, I talk to my brother every day. John Novak and I talk about things that are... thanks, Andy. Happy Thanksgiving to you. One of the things in the last 27 years Nexgen has done is it's identified patterns that create advantages, guys, that give you the opportunity to make trading a little less stressful. One of the things that I've picked up in the last 5 years of doing this is that everybody has patterns that pull money out of their account. Everybody has a thing that creates these losers that are avoidable. And I think one of the biggest things is the unwillingness to sit still, the unwillingness to not be in a trade, the idea that every move is your move, that every dollar is your dollar, that every swing is your swing, that every up is your up and every down is your down. And guys, 90% of your day should be spent doing nothing if the advantages aren't present. 90% of your day is waiting for those things to come together, waiting for that momentum to have that clear path, and then finding a way to capitalize on it. And there's going to be times when you just don't have a clear path, guys. There's going to be times where there's fib after fib after fib, and there's going to be times where you just have to pump the brakes and do nothing. The most successful traders that I've ever worked with in this classroom have the ability to do nothing when there's nothing to do. 10% will be taking it. And my goodness, billions every hour are traded in the futures markets. Find a way to capture 400 to 500, guys. Get into a six-figure income, live comfortably. And then we saw this in crude oil. When you go back and you do some study and you really learn how to trust, it's still, well, there was your close. It went down. So Rob, there was your loss of momentum, right? That's your exit condition. Not a coincidence that it happened right at a fib. But what happens, and I've lost my train of thought, is that you know where these problem areas are. You know where these challenges exist, guys. And we looked at it right here on crude oil. We watched rule number 2. We watched rule number 2 keep you from making bad decisions. For 5 hours, there wasn't a damn thing to do. Embrace it. Embrace the idea that it's okay to do nothing. And then when everything says down, right? You took the trend trade a little low and you just held it because nothing changed. Quick path. Let everything go down. Get below. Find your entries. And then there's rule number 2 again. And does everybody see the big bounce? Does everybody see the way the market is rising up right off of that Fibonacci area? Is there any reason not to get paid at these lines? And guys, that's kind of what we're working on right now. Is you know exactly what it looks like to have momentum. It's easy to recognize. It creates a huge advantage. A huge advantage. And then the thing that you have to do. Bum, 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 bum. Let me go to my odds favorable momentum. Watch this. Is you have to know the difference between strength and weakness, right? The difference between odds favorable momentum and anything can happen triggers. And then the hardest thing you'll ever do is absolutely nothing when your triggers are weak, because you don't have the advantage. But when they're strong, we'll look for opportunities, and when they're weak, we'll sit on our hands, and when they're strong, we'll look for opportunities, and when they don't agree, we'll sit on our hands and we'll wait for the opportunities. And guys, this is the easiest way to find success with Nexgen. Have your advantages. And then the next thing we're going to do, once the momentum is there, let's go back to termination conditions. I've got a million pictures. Is if price reaches an area and the triggers remain above, you have to be willing to do nothing. And if price reaches an area and the triggers remain above, you have to be adamant that there's nothing to do. And if price reaches a line and the triggers remain above, you have to say to yourself, damn it, this just isn't my trade. Let me sit on my hands and do nothing. Even the other direction. If I reach the line and the triggers are below, it's okay to do nothing. It's okay to sit on your hands, guys. Again, I want you to see how much the market moves. I want you to bunch this up and say, man, how many opportunities were in all of this movement? I didn't have to be in every move to get rich. I just have to be in the best moves. I have to be in the highest probability moves. I have to be in those moves that begin to couple these advantages so that I've got a higher chance of success. I have a statistical advantage each and every time I get into the market. You guys with me so far? Am I going preachy? I want you to just figure out these two, and then you'll find your trades. I promise. You'll find your trades. So, is it a termination? How do I know? My triggers didn't break the area. Is it a clear path? How do I know? My triggers broke the area. Guys, the recipe never changes on the large chart. That's it. It's either a termination condition or it's broken, right? And then there's the transition in between. Know the difference. Study it. Go back, take pictures. And the easiest way to do that, golly gee whiz, will you look at that termination condition? So let's go through it, guys. I have odds favorable momentum. Does everybody see it? Give me a Y if you see that momentum. That's our first rule. That's exactly what it looks like. Separation between the small and the large. Are you guys cool with this? Andrew, M, Nanda, Izzy, Josh, Dennis, Donna, Jonathan. Everybody's cool with this, right? Momentum's easy. The scissors look like they're open. Ladies and gentlemen, price reached Fibonacci resistance. My triggers are below resistance. Do I have a clear path? Give me a Y or an N in the room. Is my path clear? No. Jeffrey says no. Nanda, you say that the path is clear. So Nanda, this lesson's for you. When price reaches an area and the triggers remain below, it's not a clear path. There's rule number 2 is not met. You don't have room to profit targets. You don't have any idea what's going to happen at that area. And guys, let me show you something. And this is why rule number 2 is a rule. This is precisely why rule number 2 is a rule. Because that one stopped it, that one stopped it, that one stopped it, that one stopped it. That one, that one, that one, that one. Don't be so full of your own opinions that you believe this one's going to magically break. Does that make sense? If price reaches an area, first part, price reaches an area. 2, triggers below resistance, above support, rule 2 not met, no trades into the area. Looking for the tip of the trick. Are you looking at that right there? Awesome. So Nanda, here's our lesson. If price reaches the area, once price reaches the area, we're done with price. After that, triggers will define whether it's a term. And guys, this is why I ask for those Y's and N's in the room, Because Nanda, what we just did is we just realized where your misunderstanding was. Once price reaches the area, there's no trades into the area. Once the small triggers get above and the larger below, Nanda, right now this area has the potential to break. But until the large triggers get above the area, it's only potential. The same way this was only potential. The same way that was only potential. Does that make sense? I love this. Awesome. Guys, I'm telling you, participation is the key. If you tell me how you're reading your charts, I can find out whether or not there's a misunderstanding. And once we clear up misunderstandings, Nanda, you're going to be a better trader today. Because you're less likely to trade in determination conditions. I love it. Thank you for answering the question and answering it honestly. That's good stuff, guys. I love it. So when you have momentum, when the path is clear, then you just have to figure out your entry. And guys, everybody has an entry. There are trend trade entries. There's momentum entries. There's HVA entries. There's that white bar trade using a range chart entries, guys. The one that I teach in the room more often than not is that when I've got momentum and a clear path, I'm looking for a pullback to areas inside of triggers, and I need it to happen before I hit that fib. This is the high probability trend trade. If I just jumped in at the top of the move hoping momentum would carry me, a close on the wrong side of the triggers is my exit. Rob, that was for you. If I said I have momentum and a clear path and I just jump in, a close on the wrong side of the triggers, that's my exit. That's my loss of momentum. That's my advantage is gone. And it means that I have to be willing to take a loss. And then if that momentum trade fails, it may very well turn into a trend trade, a pullback to areas inside of favorable large triggers. And guys, that's rule number 3. Rule number 3 is defining where the market is most likely to continue. Rule number 3 for the high probability trend trade says that you're going to be so stinking precise that you're going to use a limit order to buy or sell a pullback in an areas inside of favorable large triggers. So if you just arbitrarily jumped in and you get this loss of momentum, dude, take your hickey. Whatever, didn't work. There's always another trade coming. So look at my large chart. I have momentum. Does everybody see it? Does everyone recognize momentum on the large chart? I have a clear path. Small and large are above the fibs, and I haven't reached the next area yet, which means that if the momentum dies, guys, I'm looking for an entry for a trend trade, and that entry for the trend trade, it comes from areas inside of favorable large triggers. It comes from a line inside of triggers on the small chart. So if the momentum dies, I'm hoping that lack of momentum pulls me back to areas inside of favorable large triggers. And the way that works is everything says up. And that reversal bar, that loss of momentum, tells me to look for the areas inside. And once I find them, put a limit order at them. And what that does for you, and let's go back to the chart real quick, is it gives you the ability to understand precisely where this trend is likely to continue. And it gives you the ability to understand precisely where your stop should go. It should go outside of the triggers for the high probability trend trade. And this goes back to, and this is where the second lessons are going to come in, guys, today, is that as long as I'm on the wrong side of these triggers, I can't take a momentum trade. As long as I'm on the right side, I can hold on to a momentum trade. When momentum dies, my best chance of success comes from an area inside of favorable large triggers. All of this to be said, understanding, that's not the one I wanted to show you. Understanding why you're getting into the trade, guys. Understanding your whys. And that was the picture that we created earlier. If I'm in a high probability trend trade, my whys are momentum and a clear path in that entry area. And those are my whys. And my reason for exit My reason for exit, my exit strategy means that my Y's have gone away. My Y's are my advantages, so my exit strategy is when those advantages go away. And this is why you have to understand why you're going to enter and why you're going to exit. And I think this is the most important because you're defining your whys. Why am I in this trade? Those are your rules, guys. I'm in this trade because I have momentum. I'm in this trade because I have a clear path. I'm in this trade. No, not by definition at all. Rob, jumping into the market arbitrarily is fearful if you don't have a reason. That's all it is. There's more to it, guys. Jumping into the market is not just jumping into the market. You see people doing it in this room, and you think that they're just arbitrarily jumping in because of momentum, but they're not. There's so much more to it. They're still factoring in the path. So one of the challenges that happens is people come in this room and Ron, you guys all know Ron. Ron takes an entry right here. And that's where the box is. And you guys say, oh, let it go and then just jump in. Guys, there's more to it. There's clearing the fibs with the price bars. There's making sure you have room to targets. There's making sure that you're not trading into lines. And if you come into this room and you try to replicate what someone else is doing without understanding why they're doing it, it creates huge challenges for you, which is why every day we talk about, guys, learn how to take this trade. Learn how to take the high probability trend trade. This is the trade that typically wins 70 to 80% of the time, guys. This is the trade that teaches you to read your indicators. And this is the trade that makes it so that you begin to recognize those other opportunities. Those trades you see other people taking in this room, they stem from their understanding of this trade. That it stems from their ability to recognize momentum and clear path. And then from there, they're finding opportunities. They're finding other entry areas. So every time I'm looking for a trade, I want momentum, clear path, and an entry area as the brand new user. And then that's going to take me to momentum, potential to break an entry area. And then that's going to take me maybe to that momentum trade. So, Rob, that momentum trade is not even a jump in trade. It still uses areas and it still uses breaking of areas. And then the HVA trade still uses areas and then it still does the other one. And then that final trade, that one that you and so many people are taking, that's the JTFI trade. And the clinical definition of that JTFI trade, guys. This trade is nothing more than, holy crap, I'm missing the move. I think I'll just jump in and hope stuff works out. Does that make sense? There's no rhyme or reason to just jumping in for a lot of you guys. It's just hope. And Pete put it in there. It's hopium. Hope in one hand, poop in the other, guys. Which fills up first? It's a very strong drug. But this is why we talk about advantages every morning, ladies and gentlemen. This is why we talk about recognizing it. This is why we talk about making sure that you understand why you're getting into the market. Because the idea is that if you understand why you've gotten in, it opens the doors for all of these amazing lessons. Let's start our slideshow again. So if rather than just jumping into the market, right, the large chart says up, the large chart path is clear, instead of just jumping into the market, one of the easiest things to do is to wait for the reversal bar and say to yourself, all right, here's my loss of momentum. Let me see if I can define an entry. And it's pretty easy, guys. You look for triggers. You look for large and synthetic, and you say to yourself, this is precisely where these bars are likely to return. This is precisely where price is likely to return. All the while reminding yourself that there's a momentum and a clear path on the large chart. So the rule just says, hey, let's enter at an area inside of these triggers. Guys, let's get in at a line inside of those trigger lines. And you can do this with such precision that you literally wait for the market to come back to you. You sit there with a limit order and you say, all right, if they come back to here, I'll be in a long trade from a point where the market is most likely to bounce, right at an area inside of triggers. Does that make sense, everybody? If you define your entry, and your entry is based on a statistical advantage, guys, this pattern right here has been proven through backtesting, through study. It has been proven. It's unquestionable. You can't deny it. That when I have momentum and a clear path, if I enter at a pullback in an area inside of favorable large triggers, this is a trade that typically wins 70 to 80% of the time. This is a trade that creates confidence through that memory of success. And this trade, as we teach it, what it does is it literally teaches you how to read your charts, how to understand momentum and a clear path. And the great thing about this trade is it sets you up for management. Because once you understand where the market is most likely to continue, you do realize where the market shouldn't go in this scenario. The market shouldn't get below those trigger lines. It shouldn't get below those areas inside of favorable large triggers. So if you're taking a high probability trend trade, here's the key. My Ys are momentum, clear path, and entry. My Ys are gone 4 to 5 ticks beyond these trigger lines. This is where your first stop goes. So understanding why you're getting into the market gives you the ability to manage it effectively. This is where my advantage is gone. This is where I choose to take that exit. And guys, there's all of these entries that new users present. There's all of these fearful entries. There's fear of missing out entries, guys. And the first one is just jumping in. Oh my gosh, it's going without me. I'm going to jump in. And if you're in up here, you still have to put a stop below those triggers. That's the only safe place where the market shouldn't go. But that's ridiculous to put that much stop on it. So if you jump in, let the reversal bar take you out. Let it. That's your loss of momentum, guys. The only reason you jumped in was fear. This is where the market told you that your fear is about to get walloped. The second one is not waiting for the areas, and you see those fluctuations and you panic and you're like, I got to get into the market. It's going without me. And then sure enough, all you've done is increase your risk. All you've done is reduce your profit potential. But if you train yourself from the get-go, hey, you know what? I'm going to get in at areas inside of favorable large triggers. I'm going to take that trade from the best of the best spot. This is where my statistical advantage lies. Guys, this is the one that provides you the least amount of risk. This is the one that provides you the most room to your profit targets. And this is the one where the market is most likely to do the expectation based on the pattern. And once you get it in the direction of your trade, guys, once that bar goes, you can reduce your risk a couple ticks below. The challenge is none of us trust this in the beginning. None of us believe that this is going to happen. None of us believe that the market's going to produce another trade, that clear path, that momentum are as key as Mark makes them sound each and every morning. So you've got to develop trust. You've got to learn to recognize these. You've got to believe in these concepts. And that doesn't come from taking trades. That comes from studying trades, guys. That comes from learning the rules. Learning what they look like, learning what they mean to you, right? Being able to speak those advantages out loud every time you look at a chart. You do have to practice. Practice is huge. But you've got to post them in the room to make sure that your chart read is correct. And Nanda, I hope you're okay with me calling you out here. When I asked if the path is clear, and Nanda said yes. Nanda just got an awesome lesson that it isn't price breaking the area that creates a clear path, but rather it's the triggers that define it. And now, because of the willingness to present, because of the courage to say, hey, I might be misunderstanding this lesson, let's get some clarity, the clarity is there. And now moving forward, hopefully, trading gets a little bit easier because those obstacles aren't in the way, guys. Keep it simple. Keep it simple. Keep it focused. Keep it basic in the beginning. Get good at one thing before you add the next thing. So we're going to go through how to study. And if you're having problems with momentum, you owe it to yourself to do this. Guys, we have a long weekend and you guys are going to go through withdrawals. Spend an hour or two going through this 101 drill. In order to get to where you want to be, you got to be able to recognize these looks and patterns, and you have to understand them, and you've got to be able to recognize them quickly. So this is where trading takes a side seat to picture taking. Take 25 pictures of strong triggers, weak triggers, clear path, termination. Guys, understand, use the spreadsheet. Know the difference between rules met and rules not met. This is the biggest advantage you can give yourself. Because once you understand strong triggers and clear path, you'll find your entry area, and it may not be the high probability. So guys, on this spreadsheet, and I give you guys the spreadsheet every day, you have it, it was downloaded on your computer when you started your demo. Take pictures of strong triggers, and I want you to see what I did with each picture. So I took pictures of strong triggers, but I didn't just take the pictures. What I did is I said, all right, here's my arrow to the rule being met. There is separation between the small and large, and it looks like open scissors, and this is strong triggers, and this is rule 1 met, and this is odds favorable momentum, and I don't know why I put that. I was probably feeling silly that day. And guys, this is always your look. This is always a strong trigger look. Does that make sense to everybody? I've already given you in the spreadsheet 55 pictures. 55 pictures of strong triggers annotated. So there's a connection between the look and the rule. I've only given you 29 pictures of weak triggers. I've only given you 18 pictures of a clear path. But look at, I've given you 79 pictures of termination conditions. Termination conditions are the most broken rule, guys. I've given you a 79 picture head start. Do your work. Go in and take pictures of strong triggers, weak triggers, clear path, and take the time to annotate it. Well, Mark, I don't like to type. Okay. Mark, it's a lot of work. Mark, I don't have time to take these pictures. Mark, this isn't going to work for me. All right, that's cool, guys. Don't do it. But I'm going to tell you that the people that have done this are doing better than you. The people that took the time to learn the rules, they're doing better than you. They're where they want to be. So you're going to get out of the software what you put into it. And eventually, you'll piece these together to create a trade. But you got to know the pieces so that you can build the whole. So I'm giving you this as well, guys, the high probability trend trade checklist. The first thing that it asks on this checklist is the market coming from a strong top or bottom? Guys, a strong top or bottom is nothing more than a rules met termination condition. Price reaches the area, triggers don't break. If that reverses the market, it's a strong bottom. And a strong bottom is the precursor to the highest probability trend trade you can take. And M, I want you to answer your own question. Odds favorable momentum means, and you're looking to the downside, that the small triggers are down and below the large triggers, and the large triggers are wide. They're widening. And the space is created. And M, there's one thing missing from your large triggers, isn't there? There's no space. They're not wide. Guys, there's zero momentum in flat triggers. There's zero momentum in flat triggers. So what you have, M, is what could very well potentially be momentum if they open up and they get wide. But there's a really good chance that this termination condition is going to prevent that. So that little patience, waiting, for the width to come between, that separation between the two lines. That's where your advantage lies. Great question. Absolute, wonderful question. Don't stop asking questions. So there's your momentum. So you can go back, you can take this sheet, and you can always double check. Instead of saying, hey, let me post a picture in the room, and guys, you're always welcome to post a picture in the room. Let me go back to my notes. Let me do a little work, create a little correlation. The same is true on terminations. There's pictures for you. The same is true for defining your entry area, 100%, long and short. Also in that spreadsheet, there's defining your entry area for long and short, breaking it down through the whole individual process. And then the second sheet, this is your bacon saver, guys. This is your police force. This is a checklist that you can print out, that you can put on your desktop. You can laminate it, use a dry erase marker. Someone in here did that. I thought it was brilliant. Ask yourself these questions every time you're looking to take a trade. And here's the deal. When you add a trade, you need to create a new checklist. Is the market coming from a strong top or bottom? Was there a termination that reversed the market? If there wasn't, that's okay. You can still take a high probability trend trade. But you may need to manage it a little more if you start getting a bunch of divergences. Do I have odds favorable? If I'm looking at my chart and I literally say out loud, do I have odds favorable momentum? And the answer is yes. And it being yes is the only reason I go to the second rule. Well, then I've got that advantage. That advantage is in place. And then I have to ask myself, Trent, is there a termination condition? And if I don't remember what it is, let me go this way. I'm going to add to this. Did price reach an area and the triggers remain below resistance, above support? You can put that little cheat on there. And if the answer is yes, there's no termination conditions, well then I'm going to see if there was an area inside of favorable large triggers. And if I mark yes to each and every one of these, nobody in the history of this checklist has done worse than 70%. Nobody in the history of this checklist. And guys, I've had engineers go back test it over the course of like a year with the rules being true. And I think 83%, 82.4 was the final tally on it. Your job is to win more than you lose. And if you're struggling to do that, that's a pretty good number to work with. And that's where this KISS plan comes in, guys. And this is where I beg and plead with you guys. Keep it simple. Guys, this KISS plan is a stepping stone in your learning journey. The high probability trend trade isn't your get rich trade. The high probability trend trade is the one that allows you to see your get rich trade. It's allow you to recognize the advantages that are going to make management easier, that are going to make entries easier, that are going to make profit taking, all of this stuff easier. But in the beginning, until you have that ability to read your charts, guys, keep it simple, keep it focused. And then through simulation, study, class feedback, continuous practice, you're going to craft a plan that's tailored to your goals, right? Maybe you love that jump in trade. Well, once you're good at momentum and clear path, it's a lot easier. Maybe you like getting in closer to areas. When the market reverses, your ability to recognize those termination conditions and understand triggers rolling is going to give you that ability. Don't be in a hurry to get to the finish line, guys. There's some things to learn, and there's a little study that goes into it. Your simple plan is don't fight the large chart. And when I say don't fight the large chart, there's two things specifically that drain money from people's accounts faster than anything else. And it's trading against strong triggers. And if you're always trading with momentum, well, then you're never trading against strong triggers. But this is the other one, and the most common one, guys, is trading in determination conditions. And there's a reason that I beat this horse dead every day, over and over. Because this is the biggest taker of money from new users. And if you can get to the point to where you never trade against strong triggers and you never trade into those lines, guys, you're better than like 70% of the traders in the world that I've met. define your entry. Get in at the right spot because great entries create manageable trades. But once you're in, you've got to manage it. So, right, there's that exit strategy. When are my advantages gone? What's it going to take to get me out? Guys, you're not going to have the ability to understand that in the beginning. There's no reason for you to. You're new. Don't put that pressure on yourself. So in the beginning, let your management be super mechanical. Let it be so basic. Let it be something that pulls the emotion out, the opinion out. Let it be nothing more than just getting paid and protecting yourself, guys. And that's what the KISS plan management is designed to do. It's really dependent on your ability to get in at the area inside of favorable large triggers. And guys, this management plan is specific to the high probability trend trade. If I enter at the area inside of favorable large triggers, then my stop is 5 ticks below the triggers. If then. And there's nothing for me to do, guys. I either get stopped out or I don't. And here's the deal. Anything that wins 70 to 80% of the time, you're going to lose 20 to 30% of the time. It's math. Every 10 trades I take, I should plan on losing 2 to 3 of them. Every 100 trades I take, I should plan on losing 20 to 30% of them. And guys, here's the deal. Is because you understand where the market is most likely to continue through the rules of the high probability trend trade, you know precisely where the market shouldn't go, which means that you get this come and get me attitude. The only way I'm going to exit this trade that typically wins more than it loses is if they have it in them to come get me. And if they don't, and more often than not they won't, they're going to give you a reversal bar in the direction of your trade. And this is your first stop movement. Your first stop movement will be 2 ticks below or above a bar in the direction of the trade. Good morning, Miss Cindy. So once I get this reversal bar, my new stop is 2 ticks below, and I'm still powerless. I never know what's going to happen. But now if things go south, if something goes wrong, I get to take a smaller loss. I don't have to keep my stops off in the distance. Guys, I'm better than that. I've got all these advantages. It's doing everything I hoped that it could do. My stop goes below the reversal bar. And I don't touch it. I either get stopped out or it goes to my first target. And in the KISS plan, I had 2 goals in mind when I created this management plan for the KISS plan. The first goal was to take the emotion out of stop placement, to give you very concrete if-then, emotionless. The second thing was to get paid. Good morning, David. To get you paid ASAFP, because the goal in trading is to make money, guys. And when you're a brand new user, everybody has this delusion that I have to make thousands of dollars a day to be successful. And nobody ever does the math beyond a day. Guys, this is a $100 target. Oh, have a great Thanksgiving, Gary. I know that's going to be tough. We'll be thinking about you. Your first target is 68.50. If you entered at 66.50. This is 8 ticks on the S&P. That's $100, guys. And very often people are like, well, $100 isn't enough, Mark. I need it to be more. Guys, nobody in this room steps over a $100 bill on the ground. Nobody. But in trading, we convince ourselves that that's just not enough. Learn how to get paid. $100 is getting paid. And then your stop movement is to break even. You have absolutely nothing to lose. And remember that you'll create a management plan when you get good. In the beginning, this is designed to give you the highest chance of success with the least amount of risk. So now you're break even. And the only reason you're break even is because we're developing trust in the idea that the whole reason we took this trade in the first place was momentum and a clear path. So this management plan is really, it's designed that has to be true. Your second target, if you don't get stopped out break even, is only $200 away from your entry. And that's a $300 trade. That is one trade, 3 rules, 2 charts, $300, guys. This is your best case scenario. This is the easiest trade. This is the highest probability win percentage trade. And this management plan is designed to not only protect you, but get you paid ASAP. And this is where I remind you guys that if this is the best you do every day, is one high probability trend trade, and then you shut it down and go play golf, That's a $75,000 year. Guys, if the best you do is $100 a day, that's a $25,000 year. And I want you to ask yourself right now, is my trading producing $25,000 a year? I know the answer for 99% of us. Then why aren't you trying to get paid? Why isn't your goal to get paid? Why do you keep trying to hit home runs when base hits pay bills? Because once $100 is easy, $200 isn't hard. $300 becomes pretty simple, and it keeps getting better and better, guys, the better you get. So learn how to get paid. And then just to go full circle, there's two things you have to know before you try to go make money live. You have to know why you're going to enter the market. Why? Because your entry rules are based on patterns that are proven to win more than they lose. This defines the whys. But you have to know why you're going to get out. This is where we all struggle. Because emotion kicks in when management starts, guys. Your exit condition should be identifying when your advantage is gone and your targets aren't reached. So, if I'm in a high probability trend trade, I have to understand what the expectation is. The expectation is that I'm probably going to make it to the next area. If I truly have odds favorable momentum, if I really have a clear path, my expectation for a trend trade, guys, is that I'm going to the next area. I'm going to the next line. With this look, that's my goal. And the only thing that's going to take me out of this trade is maybe 3 divergences on the small chart. And I'm going to see fluctuations, and I'm going to see bounces, and I'm going to see pullbacks, and I'm going to see a close on the wrong side of the triggers maybe even. But that's not my management plan. My management plan is very precise, and it's very specific to the high probability trend trade. And the cool thing about rules is they eliminate the need to know what's going to happen next, guys. If you know that your pattern wins more than it loses, well, then you know that it wins and you know that it loses, right? That's all you'll ever know. You'll never know which one's going to win. You'll never know which one's going to lose. So you have to be consistent in your actions. You have to be flawless in your execution. Every time my rules are met, I have to take this trade. I'm bound to it. And then once you go to your second trade, and here's a challenge. Some of you have 4 or 5 trades in the quiver, and you still don't know the rules for one of them like the back of your hand. You don't know your exit conditions. When you begin adding trades, let's go down to 100% here. If I take a high probability trend trade, I'm just going to go to the open space here. If I take a high probability trend trade, I'm looking at 3 rules on 2 charts. So technically, I'm thinking of 5 things, guys. I'm thinking of 5 things. If I add the 50-50 trade, which is 4 rules on 2 charts, that's another 6. I'm up to 11 things that I'm thinking about. And then if I add a momentum trade, that's got 3 rules, 2 charts, so that's another 5, so I'm up to 16. And then if I add an HVA, I'm up around 21, right? And then if I throw in that JTFI, hell, usually not thinking when I take this one anyway. And guys, and then there's management. So I take 21 things based on entry, and then I've got another 25 things to add into that management. And I don't know about you, I've never been brand new at something and been able to think about 50 things at once. So, once momentum is second nature, and this is the key. Give momentum a couple days, guys. Just nothing but momentum. I'm not worried about the trade. The only thing I want to get good at is odds favorable momentum. I want to be able to recognize it. And then I'm telling you, that's a day. Is there anyone in here that it took more than a day? Other than M. I don't know what that nonsense was. Just kidding, M. To learn odds favorable momentum, it's the separation. And you've got the perfect picture for it. And then you got to learn path. And that might take some of you a week. If you actually study, if you actually go through this 101 thing, and you take these pictures and annotate the whys, price reached the area, triggers didn't break, it'll take you 2 days to trust it. If you don't do that, it might take you 2 years. So do the work. And what happens, guys, is build. So now I have momentum. I'm going to learn clear path. Now I understand clear path. So when I have these two together, I'm going to go define my entry area. And guys, you're going to have to work on it. And the easiest way to do it is to post your pictures in the room. Guys, post your pictures in the room. Everything you do. Mark, this is what I see. This is where I entered. This is why I exited. Let's talk about it, right? Let's talk about my entry. Let's talk about where my stop is. Let's talk about whether or not I actually had the advantages. And guys, one of the things that I'm good at is identifying your patterns, right? Identifying the things that are creating challenges for you. And then use the spreadsheet. Take those pictures, annotate those charts, guys, but don't just do it. Who studied yesterday's trades this morning? Who looked at what they did yesterday and said, you know what? I'm going to try and do it a little better today. I'm going to recognize the things that worked, the things that didn't. You have to. In Z-Robot, it sets you up for the day, doesn't it? It's amazing if you go back and study what you did yesterday and you say, holy crap, I traded in termination conditions 3 times. Your mental focus is almost instantly on not trading into termination conditions or fighting triggers or entering early or exiting late, right? You create this little plan for yourself. This is what I need to do today to be a little bit better than yesterday. And that's the other thing that comes from it, guys. When you post in the room, I help you identify your thing if you're unable. So use that spreadsheet. Go through. Make these things really pop off of the page for you. And ask for help. Please ask for help. That's the biggest thing. Tiger Woods had a coach. I don't know if you guys knew that. Tiger Woods had a coach. Wayne Gretzky had a coach. Now we're getting that momentum, man. We're getting there. Serena Williams had a coach. Usain Bolt had a coach. And all he did was run. And he had a running coach. Guys, this is really the magic of what we do in here. The thing that you have to know when you're trading is what you're doing right and what you're doing wrong. That's my job, is to help you identify it and create a fix for it. And that only happens if you post in the room. So that's what the rest of the class is going to be, is we're going to talk about what we see. So let's do a read. And let's just do this. We're only going to do the large chart because the large chart is the only thing that matters. I'm coming from a termination condition that none of the triggers broke and it reversed the market. Guys, do we have a strong top or a weak top? What do you think? Strong or weak top? It's a no triggers through termination that reversed the market. It's a strong top. Hold on, let's look at this one. I have the same thing on the bottom. No triggers through termination that reversed the market. Is that a strong top or bottom? Or is that a strong bottom or weak bottom? It's strong. That never changes. Look at this. You guys are already a fourth of the way there on your checklist. So now I have to go to momentum. Do I have odds favorable momentum? Are my smalls below the large? Are the large widening? Is there space between? What do you guys think? M says yes. This is how I read my charts, guys. Notice that I don't have a small chart up. Does anybody not see the momentum? Separation between the small and large, the larger widening. And a lot of you are starting to get ahead of yourselves and say, but what about the fibs? What about the fibs, Mark? Who gives a crap about the fibs? Let's define momentum. Once we define the momentum, now we'll define our path. So there's one-to-ones and none of the triggers are through. There's a fib and the smalls are only eking through. There's another fib, the smalls are through but the large are above. And there's another fib and the smalls are through but the large are above. So there's 3 options. There's three options here, guys. I either have a clear path, I either have the potential to break, or I have a term. Which one do you guys think it is? Price reached an area and the triggers didn't break. It can't be a clear path. The small triggers aren't even through the one-to-ones. It can't be the potential to break. So guys, that leaves a termination condition. Does that make sense to everybody? How do I know? Because I went back and I studied these termination conditions, and I had this picture printed out and put on my desktop. None of the triggers through. Well, that's not a clear path. It's not the potential, and it's definitely not clear. And guys, that's your large chart read. So if I have a strong top and I have momentum, but it's directly into a termination condition. If I'm a rules-based trader and I insist on a statistical advantage every time I take a trade, am I still looking for a trade? That's what you have to ask yourself. Am I still looking to enter the market without that clear path? Smart money's typically no. And it's still not clear. And then Pete's absolutely right. Look at where your large triggers are. Guys, if you reach a Fibonacci area and the large triggers are a full bar away above that reversal bar marker, this is what we call the gap theory. And price is likely not destined to close the gap back to the large triggers. And what that means for you is any trades you take in between the bottom of this bar and that reversal bar marker at those triggers is likely to get run over on the way back to the triggers. And Nanda, do you see how the price bar tried to make you believe that your path was clear, but your trigger lines told you that it wasn't? Not yet. And it's not a coincidence that you're seeing fluctuations on the small chart right where this is happening. And then the S&P certainly has odds favorable momentum to the downside, and it just pulled back to areas of resistance inside. Let's see, just for grins, without any areas on the large chart, I wonder if momentum will push it. And guys, I don't know if I have a fib here. I don't know if I have something to stop the market. But I've got rules 1 and 3. Let's put the template on and see if we're trading into a fib. We'll see if path makes a difference. This is what I talk about every day. And today was a little different than most days because I had 4 people in the room when I started, and then you guys all jumped in. Does everybody see how that is the potential to break those yellow one-to-ones, but they're not broken yet because the large triggers are still above? And if I had actually gotten in at the area inside of triggers, guys, I'm in at 27.75. And my stop is at 28, where is it? 2 ticks above, 29. 5 ticks of risk on this trade at this point. And 26.75, 24.75 is a $100 profit. Should we see if it gets there? This is a medium probability trade. This is a trade that doesn't have a clear path, but it does have momentum. This is a trade that pulled back directly to resistance inside of triggers. My entry is low. My entry is a full point late. So if I do actually hit $100 on this trade, guys, that's $200 from the correct entry. And this is what we talk about every day. Once you understand what it takes to get in, since this is only the potential to break, something like divergence on my small chart would be a reason for an exit for me. But look how it's dancing right at that fib. Do you guys see that? If I put a box around the dance that's happening, It's right on top of that area that hasn't been broken. If you don't think decisions are made at these key areas, guys, you're fooling yourself. There we go. So that was a pretty easy $100 trade, guys. That would have been a $200 trade from the correct entry. The advantage of momentum, the potential to break, and the perfect entry, guys. This is what we're learning every day. Are there any questions about it? And it's just the potential. There's no obligation for it to break, which is why we get paid quickly. That was $200. That's the best I did every day for the year. That's an extra 50 grand. It's a nice used Corvette. Oop, and then there's divergence on a 50-50. And many of you know that that's the biggest killer when there's only the potential to break. So guys, I'm going to run a lap. Whoops, I'm going to crash. Oh, I didn't crash. What did I do? Went to my untitled. Sorry. There's crude oil right into the fib. Dang it, just couldn't get a clear path. And there's that big ugly bounce. So guys, when I come back, we're going to start looking at your charts. We're going to talk about what you want to talk to. And we'll keep going as long as the market keeps moving. So go stretch your legs for a second. I'll be back. and have some fun. I'm going to scroll to the top of the chat box. We're going to start looking at the pictures you guys posted. Remember that everybody in this room is at a different level. Avoid the temptation to be the trade police. Learn something from everybody's charts, guys. If there's a lesson in there and I turn it into a lesson, it doesn't mean that you're a horrible person and you posted the wrong thing and oh my gosh, he had to create a lesson based on my crappy chart. It just means that there's a lesson in there. So Pete comes in, thought we might finally get a breakout. Large charts choppy, triggers rolled up, separated, 50-50. Man, not really a 50-50. That fib update had been there for a while, Pete. You traded directly into resistance. And while you did get in on the right side of the triggers, 3 divergences, exits, this is avoidable losses. And you added on to a position directly into a termination condition and took the exit. Guys, this is avoidable losses. When you see the line, when the triggers are below it, it's okay to not trade into it. You may get to a point in your trading where you start taking chances. That's fine. Say to yourself, these are my chances that I'm taking. And then Pete, everything says down. You get in on the other side of the fib and out at the fib. And guys, and Pete, this is a lesson that I'm going to make for it. And guys, Pete's got a different trading strategy. As long as price is at that area, as long as that's the price bar right there. As long as it's on top of that fib, guys, getting a tick below it just doesn't mean much. Getting a tick below it doesn't mean that your path is magically clear. At least let price get below, and it's going to cost you 6 or 7 ticks worth of profit. Oh no. But it's going to save you 60, 70 ticks worth of heartache. Guys, if you're one of those people, you're like, okay, my small chart, I have to clear the problem. Let the back of the bar clear it. Get price off of that decision-making zone. It makes it so much easier. So much easier. And there you go. When everything is down, when everything says go, when you're well below JTFI and hold it till the momentum is gone. Beautiful. Target was the fib, but you exited with the loss of momentum. I love this. Look at that exit. Amazing. Nice trading, Pete. Pretty much. That's it. Does the lesson make sense, though? Let it break below, and you actually see it right here. It gets a tick below, but look at the bounce, right? But once you get below it, gold rush. Nice trading, man. I like watching your charts. Every now and then I pick up something, catch a trick. All right, Jonathan. Just a potential to break trade. Termination, full reversal, odds favorable, potential to break. You didn't get in on the way up because it's a 50-50 with divergence. So you let it form that reversal bar because you know once the reversal bar forms, you know exactly where your risk goes that's going in the direction of your trade. And then that was pretty easy all the way down, huh? Nice stuff, Jonathan. Great trade. Momentum and path. Momentum and path. All right, Pete. Whoops, what did I do? Market reverse, triggers rolled down, separated, odds favorable, 50-50. So you take the jump in, little momentum. Momentum ends and you choose, you get stopped out just below the midband inside of favorable large triggers. What a great lesson here. When this happens, it changes everything. Guys, when your momentum trade dies, you don't know where it's going to pull back to. If the rules are met for a trend trade, you know that it's most likely going to pull back to an area inside of favorable large triggers, at least on the way to going back up. Which means that if you decide to hold this trade after the reversal bar, your stop's all the way up here. What a ridiculous amount of risk, right? And if you just exit just below the mid-band inside of triggers, you got out right where the market is most likely to continue. I've got so many of those exits, Pete, in my portfolio until the lesson finally stuck. But this is a good one. And then once the trend trade happens, you're like, wait a minute, there's the trend trade. I'll get in on the confirmation bar like Jonathan did, and then with all that momentum, it's a trend trade. My expectation is the next line, and you get out right at the next line. Beautiful. Great recovery. But wouldn't it be awesome to be out at 89 instead of 95? That's $240. $240 you didn't have to give away there. Great trading, Pete. I don't worry about you. Everybody's going to get caught in the moment every now and then. Everybody's going to be like, and you're going to forget everything because you're in a trade, and then you're going to come back and look at it and go, wait a minute. All right, Steve B. Let's see what you're doing here. Sometimes it doesn't, Pete. I've done it recently, and I teach the lesson in this classroom 100 times a year. And just sometimes you get caught in the moment. And you put your stop, you're like, oh, I'll put it behind the fib. And you're like, oh, crap, that's a trend trade. And usually about the time you're getting stopped out, you realize it. All right, strong top. Smalls down. Large rolling. Clear path. Second divergence. And you get in after the second divergence on the good side of the smalls. And you just run that momentum down. Nice trade, Steve. Missed because of bad stop placement. I don't know, because if you exited this, because really what it's got going for it is momentum. If you exited it on the loss of momentum, it's virtually the same exit. I think you handled that one really well, man. Nice trade. Termination, small triggers roll down. Guys, Nexgen started teaching that trade in 2004. Everything says down. The path is clear. And it pulls back. And since the areas are on the wrong side of the triggers, you wait for the confirmation bar. You say, wait a minute, I don't have any areas inside of triggers. Let me force it to go in the direction of my trade. And it's easy money. Another great trade, Steve. And then this is the NASDAQ. Small, large down. Missed the 1-to-1 on the large chart entry. It broke. So this is just one of those jump ins. I'm just going to jump in. You got room to get to trouble. And it smashes right through trouble and you get paid again. Steve, great trading, man. Let's see, momentum, direction, path, momentum, direction, path, momentum, direction, path. There's a pretty common thread there, ladies and gentlemen. Z-Robot, in your plan, no jump-ins, all a come to me, pullback, limit order, okay, momentum or trend trade. So let's start on the large chart. You've got momentum. You've got a clear path. You've got a pullback to resistance inside of favorable large triggers. Hold on. Momentum or trend trade? You had momentum, you had a clear path, you had a pullback to areas inside of triggers. What do you think, Z-Robot? Sure feels like a trend trade to me. That's it. Great look. Great look. All right, let's see. Is that everything? Nope, Miss Cindy's got us. Termination. I love that you pointed out the strong triggers, but you entered before there ever were strong triggers. All right, Cindy, your white bar trade from that termination condition was here. This white bar is not coming off of a termination. I like it though. Everything's going your way. You did trade directly into fibs, 100%. Your large triggers were still way up here at resistance. You might have dodged a bullet there. And that's one of the things, Cindy, that getting in on the first white bar off the termination condition, right? When those triggers roll, getting in right there, right at that HVA line, right at the pullback, what that does is it gives you room to get to trouble. Here, the second one puts you in at trouble. Even if you had entered at the HVA line, when price returns to the HVA line, this would have been a great trade, and it still gives you room to trouble. And that's the only thing that you robbed yourself of on this trade is, oh crap, I sure hope that support breaks because of the strong top. Does that make sense? Great look, nice trade. I love it. There wasn't a lot of room for management. So if something changed right at this fib, there would have needed to be a willingness to get out of that one a little quicker. But look at this entry right here. Termination, smalls roll. Look how it pulls right back to those large triggers. Look how those large triggers and that pullback coincides right with an HVA area. That's your trade. This is your first trade, maybe an exit at fibs. This is your second trade, and that's the one that's more likely to rock star down. Great trading though. Nice trading, Cindy. And the cool thing is once you know what you're getting into, you know whether or not you have to manage. If you know that you're trading into a termination condition, you know that you have to manage because of the termination condition. If you're trading into, if you're trading into without momentum, you know that you may need to manage because there's a lack of momentum. So it's kind of cool how when you talk about your advantages, it sets you up to think about management. So there's weak triggers directly into a fib, guys. That's not your best look. That was that potential to break. The first one worked beautifully, and then when divergence printed, that's what killed it. That's in the KISS plan. The KISS plan that I give you guys every day says divergence is the biggest killer of this trade. And it sure enough was. Trading without momentum. I love this look. So let's take the picture. This is a good lesson. I love this lesson. So let's go through the same chart read that we usually do. And guys, just for reference, I'm talking right here at the bottom of the move. Did I have odds favorable momentum? Did I have strong triggers? What do you guys think? No. Did I have a clear path? What do you guys think? Imperfect. All right, and this is where language pays dividends. Did I have an area inside of triggers for the trade? What am I talking about? So I've got, here's all my triggers. There's my first area. So M says no. All right, so let me ask, if you guys feel like being honest today, how many of you sold the mid band right here. Anybody in the room do it? I may not have any of those people in here. Well, the mid band's where trend trades happen, Mark. You would, right, Nanda? So if you guys go back to the idea of speaking to yourself in terms of advantages, I want you to see this. Print one of these out on your desktop. We said we didn't have momentum. We also said that we didn't have that entry area. This is how you avoid silly losses. I'm missing 60%, 66% of the advantages. Am I willing to risk my capital on only a clear path? Does that make sense? If you talk yourself through the rules every time, and you know there's only 3 for this trade, and then you could take it even further. Well, maybe I just want to jump in, right? Here I had momentum and a clear path. But if I want to jump in right here, there's my loss of momentum. There's my easy loser. But how could I take a momentum trade without momentum? Doesn't make sense, right? If you guys literally learn how to speak to yourself in terms of advantages, print this out. Let me get that off of there. Print this out. Put it on your desktop, and every time you think you want to take a trade, I don't care what kind of trade it is, every time you think you want to pull the trigger, go through this. Do I have this? Do I have this? Do I have this? And if you keep spitting out no's, guys, eventually you've got to say, well, maybe it's not the best time to be in a trade. Josh. High probability trend trade, clear path, momentum, yes. Clear path, yes. Enter at mid-band inside of favorable large triggers, yes. No emotions with low risk. I love it. That's an easy one, isn't it, Josh? First pullback didn't fill. It wasn't there. So you just waited. And it got you. Dude, that's awesome. Trusted my rules. And you were in at 59 and you were out at 64.5. Just $100 trade, right? Up 800 on 15 accounts today, so not me. Only one contract on NASDAQ. I like it. Right on. So predetermined target, Josh? Why did you get out? With odds favorable, momentum, and a clear path, why did you get out? When nothing changed except for the better. Do you have, okay, first target's 24 ticks. That's cool. But that's why I was asking. Do you see how you probably could have held this one longer? How it would have made sense to hold this one longer? So maybe take the picture. You've got the entries down, so now you start working on management. I love it. And the fact that you didn't just jump in. Can I ask why you have the large chart mid-band on your small chart? Does it serve a purpose? I know for like Wayne it does. Wayne uses it. Right on. So for me that's just noise. What that does is that makes me think that this is my entry when it's really not. That's just me, though. I always ask, when I see people add indicators or keep indicators on the template, right? So Cindy, he's got his large chart midband on his small chart. Why? Because it came with it? I know, that's it right there, right? I don't know. Why the hell is it there? So for me, and guys, I'm different, right? I'm different. I'm not you. And some people can look at it and have no problem. Me, I need as little on the chart. If it doesn't serve a purpose, I don't use it. So Cindy, right click on your small chart. Let's go through it. This is just me, guys. You don't have to do this. This isn't me telling you that it doesn't belong there. This is me telling you that if it doesn't serve a purpose, but it talks you into stuff, maybe it doesn't belong there. Right click and go to your indicators. And go to T3 ProTrader Send New. And right here, let's do the whole picture. Why is it not? Okay, my Snagit's not working. There it is. So on your highest time frame, it'll be 34.5 for you. Where it says plot midband, make sure that it's not checked. If you don't want it there, that's how you get rid of that. I tend to not mess with things. There's people that use it because this is a target for them a lot of times and they want to see it on the small chart. Does everybody see the termination condition? That the large triggers were a full bar away and sure enough it closed the gap. So if it's not distracting, don't worry about it. But it was like that market flow overlay chart that John did. Do you guys remember that one? That's the S&P. I'll do it on crude oil because it's easier. So John had... Oops. All right, maybe it won't work. John had one with like all the market flow lines and HVAs and white bars, and it was all on top of the 5-1. And for me, it just made my brain explode. Like it didn't work for me. Some people can look at it and have absolutely no problems. I'm not one of those people. Cindy, here's that same look that you had on NASDAQ. Termination, triggers roll. Do you see how it pulled right back to the large triggers there? And it happened to be right at an HVA line. That's the same thing going the opposite direction. So instead of waiting for this white bar, that HVA, that pullback to the smalls, it may get you in a little sooner with a little less risk on that trade because you're recognizing the termination conditions and the triggers rolling. This may get you in a few points better. And now we have the potential to break, but it's not broken. And I have areas all the way from 04 to 92. I have $120 worth of range here inside of triggers. Guys, that's it for the pictures. What do you want to talk about? We're at that day. It's Wednesday before Thanksgiving. We know termination conditions work. We've been watching those all day long, right? We know momentum pushes the market. We've been watching that all day long. Just got to figure out how to get in. And once I get in, I need to know why so I know how to manage it. That's the challenge, I think, for most people is well, how do I manage it? I'm in, now what? Let me see. Didn't make it to the fib down there at all. That's okay. You've got odds favorable. Not a 50-50. That's directly into a termination condition. Do you see how price reached the fib, Cindy? And the triggers didn't break it? It's directly into a termination condition. but you have no divergence. You take the entry right at the area above the triggers. You take quick profits, and when divergence prints, you choose to exit. I love it. And this is how you do it. If you're going to trade into an area, that level of momentum helps. And if you're going to trade into an area, great entries help. And if you're going to trade into an area, aggressive management helps. I think you took that one about as well as you could have taken it. I think you had enough advantages to justify. And I think your willingness to manage paid huge dividends for you. Great job. I like that. And you waited for the pullback. And then here, smalls are through, large are not, 50-50 look. You have momentum. And you just jump in. Right? That's it. Just gonna jump in. But everything says down. And it just keeps going down until you get a reversal bar. Absolutely beautiful, Cindy. Great trading. You're so good at this. Are you better than your husband yet? Yep. My wife is going to be infinitely better than me. There's no doubt in my mind. She cranks up her new job in January, and her trading starts then. There's no doubt in my mind she'll be a better trader than I am. She's got the brain for it. How cool is it that you knew not to go long? How amazing is it that you knew that weak triggers and no areas kept you out of the short, guys? The difference between success and failure for most people? You think so, Cindy? I'm not going to touch that with a 10-foot pole. I disagree. How's that? I disagree. I think you're better at following rules. Absolutely, Andy. Thank you for asking. Every 24 days, Cindy, my wife does not have a grasp on her emotions. All right, Andy, here's a couple of them for you. And it's just not even a difficult look. It's simply a reversal bar that finishes on the wrong side of the triggers. That's it. And I think that we try to overthink it. Absolutely. So let's go through to the live market. And let's see. Well, we're on the wrong side of everything. All right, so I have to wait for one of them to get in, but let's do this. If I were in a short trade, this is a pretty good example. Let's say hypothetically, Andy, that I just jumped in right here. Cool? Do you see that fluctuation that pushed up but then went down? And that one pushed up and then went down, but none of them gave me a close, a reversal bar. This is the first time that I got a reversal bar. That's the first time that price closed on the wrong side. And that is precisely where price started the journey up. And then once again, it's going up and it's going up and it's going up. And it tried to push, but it didn't close on the wrong side. And there's your first close. So you're already doing that when they come back to get you. Right on. But when do you use it, Andy? So here's the other question. Are you using it for every trade? Because if I'm in a trend trade, right, and I'm already at the 50-50, and there's no divergence, and there's areas inside, like, what's the expectation of the trend trade? So this goes back to the lesson that we had earlier, is you have to know the expectation of the trade. So, Andy, if I'm in a trend trade, from the area inside of favorable large triggers, I couldn't care less about a close on the wrong side of the triggers because my expectation is that it's going to reach that next area with odds favorable momentum and a clear path. And I'll force it to take me out with multiple divergences or something like that. If I'm in one of those momentum trades, that's when I incorporate that close on the wrong side. That's my loss of momentum. So it goes back to the idea that you have to understand what kind of trade you're in so you know when it's appropriate to use your manage it. When is your advantage gone? Does that make sense? So if it keeps coming back to get you on trend trades, maybe that's not where you should be incorporating it. And guys, just a reminder, thank you, John Novak. We're out of here at noon, and I'll be back Monday, December 2nd. And Andy, it goes back to, there is, and one of the things that you've done, and I hope you don't mind me saying it out loud, is that you've scrambled a little bit. You started looking for all of it, right, instead of the best. You started looking for all the trades and every move and every movement. Oh, hey, take care, Josh. Have a great one. And that's cool, Andy. So how do you reel it in? Simplify your plan. Between high probability trend trades and 50-50 trend trades, if you can't make your goals every day, you're not following this plan. There's no doubt in my mind, or most days. There's always the exception, right? And neither of these require a close on the wrong side of the triggers. And guys, the KISS plan, for you guys that are looking for everything, right? I'm taking 20, 25 trades a day, and only 4 of them fit rules. And I can't figure out why I'm not making money, right? I keep jumping into these trades and getting stopped out at the best entry, and I can't figure out why I'm making money. I keep trading into lines, and I can't figure out why I'm not making money. Guys, that's where you got to post in the room, and you got to talk about it, and you've got to know. Even Barbie was throwing her clothes on the lawn. So what do we have right here? We have the potential to break. I've got one area inside of triggers, but if divergence prints, it breaks my rules. One trade, one set of rules. And I think that the more you have to think about, the more difficult it becomes to find your trade, because your trade changes with your emotions. Jonathan, I probably cook better than I teach. But there is no divergence on the potential to break. Guys, my rules say from a strong top, with no divergence, with the potential to break, with odds favorable, I take the entry if it gives it to me. You'll be right over. Cooking starts tomorrow. I got my youngest coming over. He's a fantastic cook too. We're going to cook it up together. Have you guys ever said, how much do I need to make a day? What's my goal every day? Can we play a game? Someone give me a number. What's your goal every day? 500. Okay. We're just going to play a game real quick. Rob, is it $100 on the micros? That's ridiculous. That's unrealistic. I mean, that's fine. It's your goal. That's unrealistic. You're learning how to trade and you don't have rules and you're trying to make $1,000 a day. Cool. So for all of you guys that have a $500 goal, how many of those days do you make $200? And then give it back and have a losing day. Why do I say that? Because if my pattern is I make $200 to $300 a day on a $500 goal, and I rarely reach my goal, should I adjust my goal for now? Should I make that $200 to $300? Do it for 30 days. Have an obtainable goal. And then once I do that, maybe I look for 400 because now I'm accustomed to doing what I'm good at. And then once I'm good at that, then I start looking at 500. And then maybe I just double my contracts and that's where that 1,000 comes in. And guys, what happens is traders have these unrealistic goals. I'm not consistent yet, but I need to make $1,000. And I was up 600. I was up 600 and then I gave it all back. Holy crap. That's horrible investing, right? So I've had this conversation with people. And again, guys, I don't give trading advice. If you're not hitting your goals every day, why not see if you can hit $200 a day 5 days in a row? Is there anyone in this room that doesn't think they could hit $200 a day? Well, and Steve, you've been here a while, brother. You should be able to do that. And I know that you have rules. If you follow the rules, you can. Amen, Nanda. But Steve, you couldn't always make $1,000 a day. Oh, it's very possible. I know it is. Hell no. And I think that's the problem. So guys, $200 5 days in a row. Right? That's $1,000 week. That's a $4,000 month. And I want you to think about that. That's $200. You're adding $400 to your bottom line. Doesn't it make sense if you're not consistently getting paid to figure out how to capture $200, shut it down, go do something else? Because here's the deal. If you're making $0 a month, you're not paying your freaking bills with it. If you are making $0 a month in your trading account, you're already not paying your bills with it. Just do it. And then you know what? Do it mental. There's my $200. I still want to trade. I don't want to leave. Now I'm on sim. And now I'm just going to get better. I'm going to keep practicing. And then the next week, add $100. And that's $6,000 for the month. And then add $100. And that's $8,000 for the month. And then add $100. And guys, adding $100 is only $50 a contract. And that would qualify. But what's the challenge? The termination, right? That would qualify when they wide. But when it comes back down, do you see how they start to close again? That's awesome. You got it. Separation and wide. See how the price comes down and they start to pinch again? And what you have here is a termination condition killing it. These are just moving averages, and as you return to it, they start to close again. So momentum, I mean, in a perfect world, that's momentum. Oh, look at that. We hit our target. How cool is that? 50-50, no divergence, perfect entry, went to our target, divergence printed. That's your exit condition. Beautiful. That's your momentum, right? That's your momentum. And the wider the triggers are, the better the momentum. So, one of the things is you keep showing me pictures at the very beginning. And that's cool. Right down here. No, that's momentum. If your rules are met, take it, right? But understand that when you've got that very beginning of the move, fluctuations and problems, it's not the best look. And that separation is great. You're doing awesome. 50-50 with divergence, and sure enough, it killed it, guys. But there was a way to make money before it died. I didn't even watch the trade, and we still made money. How cool is that? So I like the idea, and I think this is probably a good talk, is, guys, set realistic goals. Has anyone other than me been heavy? You don't have to answer. There was a point in my life, I'm 6 feet tall. I weighed 240 pounds. I weighed 240 pounds, and I knew that to get closer to a healthy weight, I needed to be around 190. So I had to lose 50 pounds. You're 5'9"? That's what I'm talking about, Cindy. My wife is 6 foot in heels. I love it. Anyway, that's my own thing. So I had to lose 50 pounds. That's overwhelming. 50 pounds is a lot of fat, guys. It's hard to lose 50 pounds. So what I did, and what I did with clients back when I was a personal trainer, is I said, I'm going to lose 1 pound a week for the next year. Because the reality is I plan on being here a year later. I really do. And tiny things, tiny adjustments make it easy, right? And that's not how you spell easy. So it's kind of like, I want to make $1,000, right? And I want to do it now. Make $100 10 times, knowing that you're still going to be trading on that 11th day, right? But take that $1,000 win and learn how to grow from that. And then once it's off, the habits that you create on the way, keep it off. So guys, the habits that you create to capture $100 a day compound into the habits that create $200 a day, that create $300 a day, that create $400 a day. Very few of us regress. We only get smarter. So until we're brilliant and consistent, why not just focus on getting paid and making money? And again, I want to remind you guys that $200 a day is a $50,000 year. And if you're not making $50,000, or you're not on track for 50 grand a year right now, guys, $25,000 is more than nothing. Right now, I'm making nothing. It makes sense to make $100 a day consistently instead. And all this stems from us being alpha males and alpha females and just really kind of badasses, right? I'm a badass. $100 is beneath me. Have you met how smart I am? $100 is ridiculous. I'm not going to do that. Guys, walk away on a Friday with $1,000 in your trading account and tell me how it feels. Something to think about. I don't give trading advice. But I've watched the same person with 1,000 different faces over the last year, and it's the refusal to get paid that tends to kill you guys. What do we want to talk about? Is that it? Are we done? All right, M, trick question. Is it momentum? They're both wide, separation. Is that odds favorable momentum, ladies and gentlemen? Nope. Good job. Smaller, not above. Amen. And it's not a clear path. Son of a gun. I love it. Great answer. This one used to throw me off. When I first started, I was like, but they're all up in green and there's space, and it never even dawned on me that, well, the smalls are on the wrong side of the large. It's funny how that works. It's a lot of fun. I enjoy the learning process. Most people don't. Most people don't want to learn, they just want to win. Go through the learning process, guys. You've got you've got Thursday, Friday, Saturday, Sunday. So you've got 4 days where you can go back and take pictures. Not coming back till Monday, Rob. You've got 4 days where you can go take pictures of strong triggers, where you can go take pictures of termination conditions. Get those 2 down. Take 4 days and commit to it. And I'm telling you guys, from my own experience, you're very early on in the journey. I'm telling you from experience, if you take everything off of your chart to take these pictures of momentum, right? I'm going to take momentum pictures. I'm going to remove the ProTrader. I'm going to remove divergence potential. I'm going to remove the ProTrader synthetic, and I'm only going to leave trigger lines. Let me give you guys the picture so you have it to study. Only trigger lines. Let's see what it looks like. This is the part I can't get you guys to do. Smalls below large. Large wide. Odds favorable momentum. Rule 1 met. Smalls above large. Large wide. That's for you, M. Odds favorable momentum. Rule 1 met. That's not much fun, is it, guys? That's not as much fun as hearing target hit. But if you're not good at recognizing momentum, that's pretty awesome. Scroll back. Start pointing out weakness. And what you're doing when you do this, guys, is you're beginning to recognize this correlation. Sustained moves with momentum. And when it starts getting wonky, the moves are a little more difficult. Weak triggers retracement, weak triggers retracement, weak triggers reversal. And this doesn't even take into account areas. But guys, you don't have to have all the indicators to do it. And then go through, let's go back to indicators, and let's add the ProTrader. And we'll get rid of the trigger lines. Is that it? That's it. Without the triggers, it's not going to change colors. Well, that doesn't have everything that I need. We'll just put the template back on for the 13.2. And let's see how many times lines stop the market, right? And start doing those termination condition study. How many times does a line create a bounce? Do you guys see this? This is today. Tomorrow's a holiday. Today is not a high probability trading day. But do you guys see how many times a line? Where's midnight? Bum, 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 bum. All right, November 27th. Why do I teach termination conditions? Let's go through it. We'll use the stop stamp. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. So we're up to 20. Two, 3, 4, 5. Maybe 6 times they broke and gave you a clear path. Which one creates a higher probability scenario? Trading away from a line with a clear path or trading into a line? Guys, if you do this, how could you not want to avoid trading into lines? But nobody does this, so it's up to you. You can. You should. That's going to be your homework over the holiday. What else, guys? Is that it? We're going to call it a day? I am certainly not opposed to continue working here. Take care, Jim K. Thank you for being here, man. Guys, I'm not opposed to working some lessons. Happy Thanksgiving, guys. Take a day away from trading. Eat too much. Have a beer. Watch some football. Enjoy life. Life is short. Are we done? I guess we're done. Everybody's bailing on me. Were there any lessons on your easy midnight trades? The ones from the beginning of class, Andy? Did you miss the feedback? We can go look at them again. What made them easy? I bet that's the lesson. Hold on, let me get him. Pew, pew. So let's see. From a weak bottom, weakening triggers the room to the target. You bought the tiny pullback into the area. So what kind of trade is it? What kind of trade is this one, Andy? It's a momentum trade, right? It's not a trend trade. It's smalls outside of the large, break the area, pull back to the one-to-ones. It's just a momentum trade. You get paid at trouble, and then you exit with a loss of momentum. It's beautiful. I love everything about it. You let the area break, snap back to it, you took it. And when momentum was gone, so were you. I couldn't have done that one any better. And I don't know what kind of trade this is. $50-50 divergence, it fails. You take the pullback to the mid band, so it's a momentum style trade. You get out at the first sign of trouble. and you hold it to the next trouble. Took this one 3 times because you believe in the weak top to weak bottom, then a strong correction to the higher target. Stopped out twice, break even plus a tick. Andy, why are you so hell-bent on being first? I get it. So one of the things, Andy, and let me just give you this lesson. Oh, this is a good one. Let me blow this up. For that trade that you took there, and I like it, and you took it nicely, your highest chance of success, brother, is this look right here. No triggers through. That's your best chance of success. When you start getting that far through areas, that 50-50 look, that's where things start to go sideways. This is where those fights become huge. Especially directly into fibs. So I love the entry, I love the snapback, I love the management. Your highest chance of success on these, Andy, and it'll even tell you when you go through the software, or go through the rules. Let's go to the rules real quick. For that momentum trade, and what you took was a momentum trade. And you might be writing your own rules, which is totally cool. It doesn't bother me at all. Yeah, but that higher look is done. It's over. Good top or bottom. No triggers beyond. And let me give you this picture. But that no triggers through, Andy, is such a huge part of the success of these counter trend looks. That no triggers through pays huge dividends going the other way. So at 1039, no triggers through, no triggers through. This one's more likely to work right there. The triggers did break through, and it was a 50-50. And there's less opportunity. This is more likely to hold. And this holding from that bad bottom doesn't have a lot to do with the top before it. Does that make sense? Like this top, which one was it? This top is done. We're looking for mid bands right here. That's the bounce point. You've blown through it. This is a completely different scenario at this point. It's just a 50-50 that failed. The easier trade is just get in right here on the 50-50 with odds favorable, no divergence, perfect entry, low risk, take it down to the fib, get the hell out, call it a day. Does that make sense? So your easy midnight trades, your momentum trade was great up here. Volume is low in the middle of the night. There's not a lot of traders, and you're kind of at the whim of a lot of people. So those no triggers through help, I think. These easy trend trades are nice. I would say in the middle of the night, I would be even more hell-bent on following my rules. I like it. You took it at the perfect spot. This is just me saying that's a better look. Well, Andy, do you want to know why? Can I tell you why? When I first started trading, Andy, this movement like this felt like the NASDAQ during news. Why? Because I didn't know my rules. I didn't know what I was looking for, Andy. I didn't know what it looked like to have my rules met. And that goes back to the pictures again. If the market's, well, right now it is, but during the day, if you know exactly what you're looking at or looking for, Andy, you're not going to get caught out. If you look at your large chart and you go odds favorable, potential to break. And that's how long it should take to read your large chart. Half a second. 3 divergences in the same price range, not my trade. That's it. Nothing's even really moving right now. But you've got to be able to discern whether or not your rules are met. And you've got to be able to do it when it's slow. And repetition gives you the ability to do it when it's fast. It really does. And one of my favorite stories is Tom Brady was being interviewed, and they were talking about the brand new quarterbacks in the NFL. And all the new quarterbacks were like, "Ah, it's so fast. It is so fast in the NFL, so much faster than college." And then they go to Tom Brady, and Tom Brady's like, "It feels like slow motion at this point. I've been doing this long enough. I've seen it enough times. There's no surprises anymore." And Andy, trading is a lot like that. The more repetitions you get of the same thing, you recognize it almost instantly. And when you know exactly what it is that you're looking for, it's not a difficult read because you're not clouding up your brain with all the things that don't matter. I hope that made sense. When you're looking for something specific, it's easier to find than looking for a win. Looking for rules met, I think. There's my Texas falling out. Looking for rules met